FLA return is the topic of the day, gray areas, practical issues. FLA return is the annual return, as you all know, annual return on foreign assets, liabilities and assets, which is required to be submitted by the entities which have received foreign direct investment and or made investment abroad, that is overseas investment in the previous year, including the current year. That is which hold foreign assets or liabilities in their balance sheets as on 31st of March. Now, applicable entities are required to submit the FLA return based on audited or unaudited accounts of the entity by 15 July every year. So we are on 30th of June. It's just 15 days left. Now, you would say, what is new? This has been there for the last so many years. Earlier, it was Excel. Some of the old hands would remember there was an Excel sheet earlier, which used to be emailed to survey FLA at RBI, something like that. And now it has become a FLAIR portal. But what is new in this return? Well, nothing maybe, I mean, they keep doing little bit changes here and there every year. It's not a new concept. However, we still find internally, even at eMinds Legal, we train people. There are so many queries. Each client or each company has its own nuances of where to fit in. Is this participating share or is it non-participating share? Is this deposit or is this direct investment or is this portfolio investment? ECBs are covered or not covered? So several queries come up while filling up these returns by juniors, seniors, even experienced people. We make a note of all these queries, and this is what today the essence is. We'll give you overview, but we'll also deep dive into all the queries, share all our experience, especially Chandan and Sneha of filling hundreds of FLA returns of the clients that eMinds Legal has, and also answer a lot of your queries. So the governance around queries is that use the Q&A box. People have already started, there are already 2 questions received. So thank you, Gaurav and the anonymous attendee. You can please mention your name also. You don't need to be anonymous unless you're such a big brand and asking the query you'll feel that, doesn't suit you. But anyway, that's on a lighter note. Yeah, I mean, we all are students at the end of the day as well. So use the Q&A box. I will try to ask the relevant queries to speakers in between, or we'll take it in the end. Do not use the chat box for queries. We'll use the chat box for something else. All right. So I think with this background, over to Sneha to start with. Sneha, for an overview of the FLA return.
Sure. Thank you so much, Sumit, for the introduction. And now moving ahead with annual return on foreign assets and liabilities. So we will first cover what is an FLA. FLA return is the annual return based on the foreign liabilities and assets, which is required to be submitted by entities receiving FDI in India or made FDI abroad. So there are 2 components which you have to consider while thinking whether the entity is required to file FLA return or not. First is whether company has received any foreign direct investment in India. And the second one is whether the entity has made any overseas direct investment outside India. So whenever these 2 points are to be considered, then FLA return gets hit.
Yeah, Sneha, if you can be slightly louder as well.
Yes, sure.
Closer. Yeah.
So which entities are required to file FLA? So there are 3 broad categories under which FLA is required to be filed. First is companies who are covered under Companies Act 2013. They are required to file FLA return. The second one is limited liability partnership registered under LLP Act. The 3 other categories are partnership firms, public-private partnership firms, and SEBI registered alternate investment funds. So these are the 3 broad categories for the entities which are required to file FLA return to RBI. But there are some entities which are not required to file FLA return, and they're very important to be considered. First is entities that have issued shares on non-repatriable basis to the non-resident Indians. Basically, those entities are not required to file FLA return, as the shares which are held on non-repatriable basis are domestic investments. And in FLA, we only file the FDI related investment or ODI. Since these are domestic investments, those entities, even having NRIs, are not required to file the FLA return. The next one is entities that have received share application money, but have not made any allotment. So it is very important to understand this, because if the company has received the share application money as on 31st March, but the same has not been converted into shares, so those entities are not required to file FLA return on 31st March. Maybe next year, when those shares will be in the share capital of the company, then the FLA return will be required to be filed. The third and the most important is entities which have not received any outstanding balance of FDI or ODI at the end of financial year. So at the end of financial year, if you do not have any FDI or ODI standing in your books of accounts, then FLA return becomes inapplicable to your entity. Now we have listened what is FLA, who is required to be filed, and which entities are not required to be filed. Now we move towards what are the timelines for filing FLA. So by 15th July every year, the entity has to file FLA return on the basis of audited financials if the company has already done their audit. But if you have not done the audit, still you have to file the FLA return without any miss on the basis of internal assessment of your financial figures or on the basis of provisional financials. So the due date is 15 July, which is just 15 days from now. The next is filing revised return on the basis of audited accounts. So RBI has mentioned that the company, if there is any change in their figures provided, they can file revised return, though they have not mentioned what does change means, whether it is 10% change or 20%. So it might mean that even if there is a slight change, then you have to file the revised return. Previously, there was a due date mentioned as on end of September, but now that date has been removed. So it is always advisable to file it as soon as possible on the basis of audited accounts. Now, if you have not filed the return, what are the consequences? First, it will be a non-compliance under the provision of Foreign Exchange Management Act. And now the RBI has also introduced LSF, which was not previously there on the FLA returns. We have already been filing LSF fees for FCGPR filings and FCTRS, but RBI has now introduced it for the FLA also. So even 1 day delay will lead to a penalty of rupees 7,500 as late submission fees. So if you pay the late submission fees, then RBI will not ask you to go for compounding. But if the fees is not paid with and there is no exemption on this. So I would request everybody to take care of the last day to ensure the online filing. Now moving ahead, we have already covered what is FLA, who is to file it, who is not required to file it, and the consequences. Now moving ahead with what is the process for filing FLA. So
yeah, if I may interrupt you, just one question on the overview. That
yes.
As I said, the FCGPR and FCTRS forms also are there. They have been there for so many years, and all the reporting of FDI, whether through direct or through transfer of shares, happens through those forms. So why is this FLA required in the first place? As a separate return.
Okay, so in FCGP and FCTRS, we only give details about the share capital which has been received from the foreign entities. But in FLA, we just does not capture only the assets, basically the share capital, but we also capture the liabilities of not only our shareholders, but also other foreign and unforeign related parties also. So RBI conducts different surveys which are required as per the International Monetary Fund, in which they capture what is the financial status of a company. So RBI gives them the information about the outstanding foreign assets and foreign liabilities. And on the basis of that, International Monetary Fund gathers the information about balance of payment and international investment footing of India as compared to other countries. And that is why this FLA came in picture.
Yeah, that's quite useful. Thank you. Yeah.
Thank you.
So just to add on to that, what Sneha has mentioned. So earlier, there was no penalty with respect to non-filing or delayed filing. RBI used to simply, ask people to file, or ask companies to file that. However, understanding the importance of these surveys and knowing the balance of payments, etc., now they have covered this under the penal provisions also.
Welcome to Complinity Technologies. Complinity is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. Complinity is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000 plus laws and 24,000 plus compliances. all in an integrated platform that is easy to use with automated alerts and risk management capabilities. Is why compliance managers, general counsels and chief financial officers choose Complinity every time. Join the most innovative and prestigious brands that use Complinity. Automating your compliance management. Request a demo at complinity.com.